Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach Meir with the Bulletin Board Heroes here on Share Talk for Thursday, April the 16th, and sponsored by the UK Investor Show. Starting off with one of my favourite epic codes, and also at the moment favourite for the bulls as well, All Active Asset Capital. We've just broken out of the recent bull flag, which was capped around the 1.25 area. While we are above that, looking for further significant upside, possibly up to the rather obscure rising trend channel top at £2.50 that I've drawn from February. This stage early back below 1.2 pence, really questioning the ongoing break to the upside for the shares. Slightly less dramatic is Brave Bison at the moment, a classic trendline break there from February. A bit of a shuffle yesterday, minor bear trap towards 0.8 pence, but at least while we're above a penny and recent late March resistance, looking for a target here over the next 2 to 6 weeks towards 1.5 pence, which is a November resistance line projection on the shares. Farmers of all shapes and sizes have decided to rebound now in the current COVID environment. One of them is Hemogenics, maybe helped by its humanized mice, which is obviously good in the testing for various new drugs, etc. We've got a resistance line break here and a break of the 50-day moving average, as well as a bear trap rebound from below former December support at 1.5 pence. While we hold above that zone, looking for 2.5, or rather 2.9 to 3 pence as the target as soon as the end of next month. Another farmer situation comes in the form of Merio. Here we've got a break of the 50-day moving average and also that line of resistance from December at 23 pence. While we're above that 50-day line and even down to the 20 pence level, which is recent support, looking for a best case scenario target over the next couple of months as high as 65 or 70 pence, which is post-October resistance. Next up, Novocyte, which is difficult to resist in terms of a charting challenge at the moment. Very volatile week so far. A good flush out that we had down to 336 yesterday, which would have, I suppose, flushed out all but the most keen of bulls in this stock. Now we're looking for support to come in between, I suppose, 4 and 420, and while we're above that, looking for a January resistance line projection as high as £6.50, a target that could be hit over the next 2 to 4 weeks, although one wouldn't expect the volatility here to die down because we've had bull traps and bear traps all over the place so far this week. Next situation is a stock which I think I called up from just below 9 pence on the 2nd of April. So far we've hit that rather optimistic looking line of resistance, top of the triangle there from August at 24 pence. The view at this stage is while we're above former resistance at 27 pence, that's from 2017, we've got a new best case scenario target as high as 50 pence. I suppose the positive on the fundamental side here is that Omega is involved in antibody testing, which to my mind is perhaps more important than just testing for COVID-19. Getting back to work, etc., will be more dependent on the antibodies than just whether you have the virus in your system. New situation which may be worth looking at if the pharma explosion continues as it has in the recent past, comes in the form of Oxford Biodynamics, just near its recent low at 47 pence at the moment, probably looking for a break of a line of resistance from the end of last month around 55 pence to get this situation going. So maybe one to keep on the watch list if this is dragged up by the general rising tide in its space. Next stock is Oriole, which has looks like it's primed to get to push to the upside, waiting for a break really of 0.32 pence on an end of day close basis. We've already broken this line of resistance from January around the 0.25 pence level. So at least while above that, where the bulls are on the front foot, and they would be eyeing up a target of February resistance towards 0.45 pence. But be cautious on the shares, maybe wait for an end of day close above 0.32. Requested stock is here today in the form of Physiomics. Here we've got yesterday's wonderful green candle, which with the end of day close above the 200-day moving average at 2.72 pence. While we remain above that, looking for a significant upside, probably back towards post June or post mid 2018 resistance at 5 pence, and that should be seen relatively quickly given the spike that we've had over the last few sessions. Sarium is a stock which I think I've looked at recently, but the way it's behaving at the moment is pretty impressive. Running into a golden cross there after the breakthrough 0.4 to 0.5 pence, and while we're above 0.5 pence, looking for a best case scenario target at the top of that broadening triangle from the end of 2018 up to 1.1 pence. So let's see how that particular situation goes. Finishing off with the joker in the pack today, it comes in the form of Valerix, obviously a stock with a rather jaded history, but it does appear that there is some interest here as well. Possibly, given that there's not much charting furniture to go on, we've got a possible 7 pence target here while the shares hold above 4 pence, but that is a rather rough approximation at the moment. We'll have to see how the price action pans out. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.